Cotton prices have fallen to near 4 year lows, pressured by weak global demand, trade frictions, and broader macro headwinds. Even as production declines in key regions, sluggish consumption and high stocks continue to weigh on the market. To talk through this and more, I'm joined by market intelligence analyst Raphael Bulascoschi. Thank you for joining us, Raphael.
Hello, Fiona. Thank you very much.
So, cotton prices are trading near 4 year lows. What do you see as the main drivers behind this decline?
Yeah, we are seeing strong production in several major regions. In China, the world's largest producer, cotton fields have been developing well for the second consecutive year, with yields expected to remain high in the end of the crop. In the United States, although we had a decrease in planted area, we should see also a decent crop. And in Brazil, now the world's top exporter, a record crop is being harvested, supported by excellent weather conditions and an expansion in planted area compared to last year. This significant supply, however, is not finding the same resonance on the demand side, which has left us with countable global stocks and pressure on prices.
And the cotton price is near a support area. Could we see further downward pressure?
Yeah, there are still risks. Trade tensions, such as the tariffs reintroduced by Donald Trump, could hurt the United States export competitiveness, adding pressure to the prices in New York. That said, today's prices levels are already below break even for many producers worldwide, not only in the US but also in other key countries. Just yesterday, on August 25, StoneX Brazil updated its outlook for next year's crop, projecting a 3.5% reduction in planted area. This shows that the supply side is already responding to lower prices, which makes it harder to see a much deeper decline in prices going forward. Still, the market remains attentive to macroeconomic factors that could influence the trend of the prices going forward.
And so we have weak demand, but production is also declining in several key cotton producing countries. Are we looking at a bearish surplus scenario where weak demand outweighs declining supply?
Yeah, indeed. The combination of low prices and ample stocks is already impacting planting decisions in major producing countries. In the northern hemisphere, several key players have reduced their planted area, such as the United States, and the same price environment is influencing the planting decisions of the southern hemisphere. In other words, we are seeing a supply side adjustment to weak demand. Production is moderating in response to the surplus, which helps prevent, like I said on the previous answer, a deeper downturn in cotton prices.
And turning our attention to India, the government there is trying to perform some sort of balancing act. It wants to provide support to its farmers and at the same time keep its textile sector globally competitive. Could India risk losing global market share to lower cost competitors?
Yeah, India is a major cotton producer, second only to China, but historically it has been more self reliant and less dependent on international cotton trade. Recently, however, the government took a surprising step. From August 19 to September 30, India temporarily eliminated its 11% import duty on raw cotton. This move is aimed at reducing input costs for textile manufacturers, facing steep 50% tariffs by the United States, thus supporting export competitiveness and stabilizing domestic yarn fabric prices. The reaction has been mixed. On one hand, the textile players look favorable upon this fact, highlighting the positive short term sentiment for mills. On the other, farmers and regional bodies have voiced strong concerns, warning that cheap imports may flood the market, depress domestic prices, and harm farm livelihoods, especially as their harvest begins in October. Looking ahead, India runs the risk of undermining its own producers if the duty free policy continues indefinitely. While the measure gives its textile industry a competitive edge in the short term, especially compared to low cost players like Bangladesh or Vietnam. It also creates tension with the agricultural segment. The real test will be whether India can extend support for farmers, for example, via adequate minimal support prices, which was also raised in the beginning of the crop season in May, while maintaining export momentum amidst global tariff challenges. Overall, there's no easy way out. On one side, the government raised the minimum support prices, while on the other, it temporarily removed import duties to safeguard spinning margins. This balancing act highlights India's challenge. If the government leans too far to one side, it risks losing either farm support or global competitiveness. And in all the commodities market, but also in the cotton market, losing competitiveness can quickly mean losing market share, not only on the cotton market, but also in the cotton products market, in the textile market. In the short term, duty cuts and minimum support prices hikes may work, but in the long run, India risks turning a short-term fix into a recurring cycle of instability in the cotton market.
Well, thank you very much for your analysis, Raphael. For more videos like this, please do like and subscribe.